Hello, welcome to Just Invest Today, and today we're talking about the stocks that I bought last week. Actually, I only bought one stock, but I have additional two stocks on my watch list, and we actually just saw that little market sell-off that just happened last week and the week before. With everything going around, we know the market is at an all-time high, but I still found stocks to invest in. So in today's video, we're gonna go through the two stocks I have on my watch list, the one stock I bought, and what's happening and what I see for this company. So let's get into this video. So the first company I bought was actually called Five Below. I got it at around 166, 170. I got it at around that price. And if you see on my channel, I've been waiting to buy the stock for over like 8 months, 8 to 9 months. And I've just been waiting and waiting and waiting. And back in my old video, I had a price target around $118, a margin of safety price. But in my head, this company is like such a good quality company that I'm willing to maybe pay up a little bit. So that's why I only put like a 6% position in it, but I'm willing to put way more if it gets cheaper. So just look what just happened already from 166 all the way to 185, already 11% increase. Just boom, just like that. So I got it on a nice rebound. And the thing about this company is it crashed because it had supply chain issues and people are still worried about inflation. So this is basically a dollar discount store. And just look at this right now. It sells $5 tees, sells gaming gear, just a lot of trendy products, and it's basically for kids in that like grade school going to school and just buying these really trendy type of products. But when I think about this company, it's like a niche kind of company in like a certain specific market because it sells beauty, tech, toys, and games, arts and Halloween, like all of this stuff, and at a very discounted price. So that's the things I'm looking for. In my opinion, this company has a price moat, selling specific products. It's not just dollar store products like things that you can get anywhere, like Dove soap or like whatever you're buying, that everyday stuff. This is very, very cheap, trendy stuff. Like, who else is doing it like that? There's not a lot of stores doing it like that. Discounted stores selling trendy products that are like popular at the moment. So, popular at the moment, plus things that you actually want to buy and that you actually need. Like, you can see sports. Like, you're going to want to buy basketball, whatever, a training mat. Like, you're going to want to buy these items. So, it's not only just things that like you can just buy one off, but things that you kind of need. So we understand this store has so much potential, and on top of that, so the CEO said that it's gonna have around 2,500 stores, and right now it only has 1,100 stores, and they've been opening like 100 stores like easily, like every 2 months, every month. They've been opening up crazy amount of stores in the U.S. So you really see this company is amazing in my opinion. Do your own research, but look at this, like everything that's happening with this company. Like, look at the revenue growth right now: 20%, 2017, 18, 27%, 19, 22%, 2020, 18%, and then not even the end of the year yet. And this is gonna be, it's not 6.2%, it's gonna go back up to 20% easily. And this is with supply chain issues. So we understand that this company is just generating high returns. Like, look at this from 78, 71. Like, look at the net income generation, right? Net income generation already tripled just in 5 years. And look at the cash from the operations. Like 4x in 5 years. Like, this is just amazing stats everywhere. This is like a stat monster, and I just don't see how this company is gonna slow down. So that's why I'm just heavily invested in this company. I only have a 5% position, but I'm willing to get more if this price goes down to like 150, 130, like around that price. I'm gonna put a 15 to 20% bet easily on this, but who knows if it ever gets down to that price. I'm happy at the price I bought it right now, like 160, around 160, 70. And if it gets lower there, then I'm just going to continue to buy. Now, when we look at the balance sheet for Five Below is amazing. They have over $268 million in cash and cash equivalents. Look at their total assets, 2.6 billion, and only 501 million of liabilities. That's an amazing ratio. But the number one thing is that they have no long-term debt, guys. And that's just amazing. That's what we want to see in these companies. When you have no long-term debt, how can you go bankrupt? It's going to survive any type of crazy market possibility that's going to go on, that can possibly happen in the future. And that's that's a resilient company. So that's one of the things that I love about Five Below. They have no long-term debt. And when they make all these new stores, they can pay off these new stores in like 8 months of just running the stores. So it's just a quick turnover of how they don't need any debt. They just feel that with all the cash they generate from these stores. And you can't get any better than that when you're looking for an amazing company to invest in. So Five Below is definitely a stock I'm still looking at to get cheaper. Hopefully it does get cheaper. When I bought it at like 166, 70, I was praying it goes back down to 140. It had to get in at that price, but I was hoping it go down lower, and then it took, boom, a 10% runoff. I'm not surprised because I was waiting for this company for so long, and I just took advantage of it at that price. But let's get into the next company I've been looking at heavily. The second stock I have on my watch list is Mercadolibre. And man, you can see what the stock has done in 5 years. 804% run, man. It's crazy. And ever since that huge pandemic at $471, look at what it has done, man. 296%. So you can see has a huge run up, $75 billion company. It's still kind of the net income generation is not significantly there yet, but they're investing in so much growth. And this business has started as like eBay, but now it's moved on to more of like an Amazon marketplace type business. Just look at the site right here, man. They just have a lot of discounts. They're selling everything from phones, computers, clothes. They're getting discounts on HBO Max, Stars. They have classified ads so you can put up your cars that you're selling or anything that you want to sell on a classified site. They have their own specific marketplace stores that you can make now. They're just doing a lot. They're building a huge network in Brazil, Argentina, Mexico. But the one thing about this business is that you gotta watch out. There is competition company like C Limited, like Amazon still in this market. So there is a lot of competition, but still, Mercadolibre is the most dominant company, and that's what we want to see with these companies, them being the most dominant, and that's probably why I like it the most, because it's so dominant. Plus, we have Brazil going crazy. Brazil, their growth rate in Brazil for e-commerce hasn't even touched the surface in Brazil, Mexico, Argentina, Colombia. It hasn't even touched the surface. So that's why I love it. They're gonna grow at like 28%. The e-commerce market from like 2020 to 2024, 28% growth in these areas. So if they capture any of that growth, you can just imagine where this company can be in 10 years. And the whole amazing thing about this company is just look at the business model. They're building a network. Like you can't even compare to anything else. They have a marketplace. They get the fees off the marketplace from the what you sell, what other people sell in the market. They take fees. They have their own logistics services. They've been acquiring other companies in Brazil. And you have to remember the Brazil logistics is hard because there's so much like stuff going around. There's so much forestry. There's so much like stuff in Brazil and Colombia and Mexico. So if you build a legit logistics service in Brazil, you're going to go to this company because convenience is always on top of people's minds. How fast can I get the product? And Mercadolibre is investing heavily in this area, and this is going to build the moat. And that's what we're looking for. Mercadolibre, they have their own credit service. They have their own payment service, financial services, and that's actually battling, like, it's almost exactly like PayPal. And that's like almost gonna be the number one service for like payments there. Plus they have QR codes so you can go in store and use it as like a payment service. Like they have Mercado shops, their own published ads. I just explained, their own classified ads. Like they're just building a whole network, and you just have to imagine like this company is already dominant and it's just going to get more dominant. So we have to understand that this company has so much potential, but you still have to understand the risk of Brazil. And you know, Brazil is always some kind of government issue. Inflation is always crazy about the dollar and what they do over there with the dollar. So there's issues with that. But just looking at the company in general, like this company has so much potential. So I'm just looking at the stock price. I'm just, wow, like it just took too much of a run up. I want to buy at like 1,000, to be honest. I don't know if it's when it's gonna get there, if it's gonna get there, but I want to get like 1,000, maybe even lower. Like I have around like a 900 buy target right now for this company, but if it doesn't get there, I'm okay with just letting it run, because sometimes you just have to lose some. Like it's gonna get there, I think, eventually. Like there's gonna be some kind of maybe market crash or some kind of crash, cut it in half. Hopefully, if it doesn't, if it just runs up and never gets there, then it's okay. Like you just let it go. But we have to remember valuation is important. It's not the end all be all, but I think it took too much of a run up already. So we're just gonna wait and see, put this on a watch list, have this on the side. So my last company is Berkshire Hathaway, man. And I'm still punching myself in the foot for this, because look where it got during the whole March crash. It was at 170, and I actually kind of looked at it, but my mind was on so many different stocks. I was buying Foot Locker, Skechers, I was buying more Fiat Chrysler. But the thing about that is all those stocks did good for me. Like they had like 40-50% upside, so it wasn't a bad investment. But at the time, I think I should have bought Berkshire, because it's such a resilient company, and that's what we need right now. We need these amazing resilient companies that are still going to last another 10, 20 years when you think about it, because I feel like the future right now is very unpredictable, because the market is still at an all-time high. Warren Buffett has so much cash on his side just waiting for an opportunity. So look where it got. It got like around 170. 54% increase already, and I feel like this is just going to be a play for me. It's going to be a nice, strong cash position with a potential for future growth. So it's going to be a resilient company for me, and if I need to find something cheaper or something's better, I can like shave off all the Berkshire Hathaway and then buy another company with that, and I can still have Berkshire Hathaway on the side. So I just see it as one of those companies that you can just have, you know, it's going to stay strong, resilient. Anything comes by it, it's just going to hit it off, knock it off, and then continue to rise. So that's how I see Berkshire Hathaway. I still think it has so much potential because they have so much cash on the side waiting for a big opportunity to come. So I don't know, man. And they've been doing so good with it. And they also been doing so good with their energy business, the railroad business, like everything. So, man, I don't know. I still think there's potential for this company. So I'm going to wait until, man, if it gets back to like 160, 170, I'm going to jump in it like right away. But who knows if it gets that price ever again. And the thing about Berkshire too is it's cheap, because you really know when something is cheap, Warren Buffett will buy. And Warren Buffett has been buying Berkshire like crazy, buying back stock, like 20 billion here, 15 billion here. So he still thinks that Berkshire is cheap. And when Warren Buffett feels like it's cheap, that means it's a good sign that it was probably cheap at that time, which I think it still was. So those are my companies I have on my watch list. Tell me, what companies do you have on your watch list? What are you looking for? I'm still trying to figure it out. I want MELI. I want to buy more Five Below. I still have companies in my portfolio that maybe I might buy more into, like Etsy, see what happens, man. But tell me what you think about this list. What are you buying, man? Thank you for watching this video. Can you like, share, subscribe to my channel, and I'll get back to you in the next video. Peace.